They want $2 trillion. That would make SpaceX the most valuable company ever listed on a public stock exchange. Bigger than Apple at its peak. Bigger than Saudi Aramco's record-shattering debut. The largest IPO in the history of financial markets. And they want it done by June 12th. Now, here's the part nobody's saying out loud. SpaceX lost $5 billion last year. Let that sit for a second. The company you're being invited to buy into, at a $2 trillion price tag, posted a $5 billion net loss in 2025, and in just the first quarter of 2026 alone. That number is already at $4.3 billion in the red. This is the SpaceX IPO, and it's more complicated than the rockets. Let's start with what's real, because there is something genuinely extraordinary happening here. SpaceX built Falcon 9 into the most reliable rocket on Earth. It controls more than 60% of all orbital launches globally. That is not hype. That is a monopoly, quietly assembled while everyone else was still catching up. And then there's Starlink. Starlink is SpaceX's satellite internet business. Think of it as a giant constellation of over 9,000 satellites blanketing the planet in broadband signal. By the end of 2025, it had 9 million paying subscribers across more than 150 countries. A year earlier, it had 4.6 million. That's basically doubling in 12 months. Starlink generated $11.4 billion in revenue last year, recurring, subscription-based, high margin. The kind of revenue profile that makes Wall Street's eyes light up. This is the story SpaceX wants to sell. And honestly, it's a good story. But here's where it gets complicated. In February 2026, Elon Musk merged xAI into SpaceX. xAI, his artificial intelligence company. The one that owns the Grok chatbot. The one that also absorbed X, the platform formerly known as Twitter. The social media platform that has been bleeding users and ad revenue for years. All of that is now inside SpaceX. And xAI, at the time of the merger, was burning approximately $1 billion per month, building massive data centers, competing with OpenAI and Google in a race that requires extraordinary capital and produces no guaranteed winner. So when you buy a share of SPCX on June 12th, the ticker SpaceX has chosen for the Nasdaq. You are not just buying rockets and satellites. You are buying a social media platform, an AI startup, orbital data centers, government contracts, and a Grok chatbot, all wrapped in one stock. At a valuation of up to $2 trillion, the S-1 filing, the legal document SpaceX submitted to the SEC, confirms that xAI alone consumed 60% of the company's total capital expenditure last year. 60%. That's why the losses are so deep despite Starlink performing beautifully. Now let's talk about governance, because this is the part the hype conveniently skips. When you buy shares in this IPO, you get Class A shares. Each share carries 1 vote. Elon Musk holds Class B shares. Each one carries 10 votes. When you add it up, Musk controls 85% of all voting power in the company, with roughly 42% of the equity. That means you can buy shares. You can own a piece of SpaceX, but you cannot meaningfully vote on anything. You cannot remove him as CEO. You cannot block a merger with another one of his companies. You cannot challenge a compensation package. You have almost no say in what the company does next. This structure exists at other tech companies, Google, Meta, so it's not unprecedented. But at 85% voting control, this is an extreme case even by Silicon Valley standards. There's a phrase for what you're actually buying here. It's called economic exposure without governance rights. You get the financial ride wherever it goes, but the steering wheel stays with one man. Here's the part that should make you genuinely uncomfortable. SpaceX has announced it will allocate 30% of this IPO to retail investors. That is 3 times the typical allocation for a major listing. On a $75 billion raise, that is $20-2.5 billion aimed directly at everyday people with brokerage accounts. Elon Musk has framed this as financial democracy, a chance for regular people to participate in something historically reserved for institutions. That framing is not wrong, exactly, but ask yourself a different question. If institutional investors, the hedge funds, the pension managers, the sovereign wealth funds who do nothing all day but analyze risk, if they're not clamoring to fill this book at a $2 trillion valuation, who absorbs the gap? Retail investors, the people who buy the narrative. And the narrative here is extraordinary. Mars, satellites, AI, the future of humanity. Elon Musk's empire going public. It's a powerful story. But the prospectus tells a different one. 4.3 billion in losses in a single quarter. Capital expenditures doubling. A social media platform baked into the valuation. And a lockup period of 366 days, meaning insiders, including Musk himself, cannot sell for a year after the IPO. Which means if the price falls in that window, they write it down alongside you, except they have 10 votes per share, and you have 1. Zoom out for a moment. History is not kind to the largest IPOs of their generation. Saudi Aramco, the previous record holder, traded below its IPO price for years after listing. Uber lost more than 30% in its first year. WeWork never made it to market at its peak valuation. Rivian collapsed 70% in 12 months. The pattern is not universal. Amazon listed. Google listed. And the skeptics were wrong. But there is a meaningful difference between those companies and this one. Amazon and Google were already profitable at IPO. They were not absorbing a cash-burning AI venture on the way to the listing. At roughly 110 times trailing revenue, SpaceX would list at a multiple higher than any major tech company currently trading. Publicly, Tesla, Palantir, Nvidia at its most extreme. None of them priced at this multiple on the day they went public. That doesn't mean it's wrong. Markets can stay irrational longer than most people expect. And if Starlink keeps compounding, if Starship becomes operational, if SpaceX AI finds its footing, the math could work. But it requires almost everything to go right at scale simultaneously. Here's the question you should be sitting with. This is not a company that needs the money. SpaceX has run profitably on its core business for years. It has no urgent operational reason to go public now. Private investors have been getting liquidity through tender offers without the scrutiny of quarterly earnings calls and SEC disclosure. So why now? Why 2 trillion? Why retail? Maybe because the window is open, markets are receptive. The Starlink story is at peak momentum. Or maybe the XAI merger changed the calculus. Maybe absorbing $1 billion a month cash furnace requires fresh capital on a scale that private markets cannot absorb quietly. The prospectus doesn't answer that, and that's precisely the point. You are being offered a seat at what could be the most important IPO of this generation. The invitation is genuine. The rockets are real. The satellites work. But the fine print says you are buying into a company losing billions per quarter, controlled by one man who cannot be removed, carrying the weight of a social media platform and an AI arms race. At the highest revenue multiple of any major public listing in history, whether that's a generational opportunity or an extraordinarily well-packaged risk, that depends entirely on which story turns out to be true. And right now, nobody knows.